Come in, Herald Van Der Linde is the head of Asia Equity Strategy at HSBC. Herald, good to have you with us here. Thank you very much. I mean, I think from the last time that we spoke to, today, it's a different market. The mood's changed, prices are down significantly. And all of this here in India, when globally things are just sort of, in many cases, on the mend. Look at what's happening in China. Look at what's happening with the Euro Stocks 50 index. US is chugging along. But we've taken a hard knock. What's the mood like, and what are your thoughts now from here on?
Yeah, you're right. Last time we spoke, a flat market would not be good. And now, as you said earlier on, a flat market is as good as it gets these days. You're right. Sentiment is very different for Indian equities at the moment. And I think there's a couple of reasons for them. One is China is simply performing. People want to put money into China. That market is rallying at the moment. They need to get it somewhere. And what you therefore do is you sell large liquid positions elsewhere in other markets. So we see that the weakness that that India gets is something you see in other markets as well. Indonesia, Taiwan, and some of the other markets have not performed as strong as well. But there are also very specific Indian stories. And I think we know that earnings growth in India is slowing, but nobody knows to what extent. And what that means for the valuations attached to this market. So there's a sort of reset taking place. Lower earnings, lower multiples, and we're going to figure out how much lower we really go and how much where the new earnings growth trend is going to show up. So that's something that markets are a bit touchy-feely about, and that's another reason I think why Indian equities have been not being as strong as they were last year.
Herald, great to have you on the show this afternoon. Thanks for joining in. I guess you may agree that Indian equities have rarely been cheap. I don't think in our reporting careers we'll find too many phases where they say, oh, the Indian market is extremely attractive in terms of valuations or it's cheap. So at what point, now with this correction happening, at what point does India start looking attractive, or does it not? Because China, the US, these other markets are still doing very well.
Yeah, that's right. So if you look at the valuation, for example, vis-a-vis China, India is not super cheap yet. The problem is China has fallen so much and India has rallied so much that there's quite a substantial gap that's narrowing. But I wouldn't say, hey, India looks really cheap against China yet. It should not be that India should be at lower multiples than China, because China is not as profitable as India. So there should always be a gap. But the gap is still reasonably wide. What I think for us to say, hey, this is the time to go back into Indian equities, is really to look at momentum. If we see the China sort of rally falter, that's one thing. We're going to see also what happens globally with US bond yields. Are they moving higher? Are they moving lower? Over the last month or so, they've itched a little bit lower. But you could well have a situation whereby some of the tariffs that are being imposed are inflationary, that bond yields going to go higher, so that would not be good for Indian equities either. And then I think it comes back to that earnings growth. We had last year a weak quarter, and everybody said, yeah, that's one quarter, it's just a one-off. But now we have another quarter of weaker results in India. It means there's something more going on. And we want to have some clearance on that. So if we have an idea for the earnings growth, is the valuations stretch a little bit further, we know that bond yields are moving lower, then you can say, hey, this is probably a time to go into India. But I personally think that's not really the case at this particular time yet.
All right. Hi, Herald. Good afternoon and good to see you. But, the problem has been the FI selling. It's been relentless here in our Indian markets. And I think the holding in the Indian markets has come down to its lowest we've seen in more than 10 years. Do you think bulk of that reallocation has been done? Or do you think, they'll continue their selling ways? Because we have seen emerging market selling, but the selling here in India has been far more severe. Your take?
No, that's absolutely right. So I think probably, to be extremely frank, the bulk of that has taken place. We've seen some quite substantial outflows. And if you look at the positioning in India, a lot of people have actually reduced that quite considerably already. And don't forget, that actually happened in the middle of last year already, that actually foreigners started to reduce the positioning. It was that the locals were continuous to buy the market up at that particular time. So I think a lot of that has taken place, but it doesn't mean that they're coming back immediately. For them to really come back, I think that comes back to what I said earlier on. We need to have clearance on what the earnings growth is going to be. Probably at the moment, because we see a reallocation in the region towards Chinese equities. If that comes to an end, then that would help the other markets as well. As I mentioned earlier on, we've seen markets such as Indonesia also underperforming for the very simple reason that people just said, I want to be in China, so let's sell anything else I have. So it's these sort of things that I think foreign investors are really look at. The rally in China, the earnings pictures in India, and also direction of bond yields. If they would come down in the US because of some weak inflation numbers coming through, then that's a signal to look at emerging markets. And I think a lot of people feel still comfortable with owning India in the medium term. So it would be a market I would like to return back to.
You know, Herald, them coming back is a distance away. That's okay. As long as they stop this kind of selling that we have seen on a day-to-day basis, we're getting to seeing at least $500 million, outflows from the Indian markets from the FIs. So
now, our expectations have also been reset lower.
Yeah.
Forget about getting the inflows. If they just stop the outflows, I mean, that would help. No, but that's on a lighter note. Herald, expand on your point on China, because that's the new joker in the pack, right? Till now, it was only about US exceptionalism and how well US tech is doing and the US economy is great and all that. But suddenly, the last 4 weeks, look at what's happening to Hong Kong markets. I mean, up 15%. Is this just the deep-seek excitement, or is there something more that's really stirring in China?
I think there's something more going on in China. It's not that suddenly the picture economically or for companies has changed dramatically. I think there are positive things going on in China, but those really need another 2 years maybe to play out. I don't think that's really driving this rally now. The catalyst seems to be deep-seek, so that helps. The idea that, hey, maybe China is not actually that much behind on the technology front. But we also should not forget that the valuations are incredibly low in China. So you got a situation whereby your PEs are below 10 times. If your earnings growth is, say, 10, 15% this year in China, you suddenly have some positive news. You go from a PE from 10 to 11 times. That's not out of a stretch. Then you already get 20% upside from there. So these things can happen very quickly. And lastly, we should also not forget, in China itself, there's 22 trillion, not billion, but a T, 22 trillion US dollars in cash. Because Chinese households are not buying property because they've seen property prices falling. They're having money in deposits, but they're not making any particular money. They would love to put it somewhere else. They just don't have the confidence to do so. But if you got 22 trillion US dollars in cash, just imagine you say, okay, I got 22 trillion, so let's take 1 trillion, that's not that much, only 5% of what you own, and put that into equities. That's an enormous amount of money, right? We're talking about.
That's a tsunami.
Small shifts in sentiment can be very positive there.
That's a tsunami.
Absolutely.
So Herald, just to complete the point, from everything that you say, you seem fairly convinced on this China rally. I don't think you're seeing this as a flash in the pan, couple of days of move. Is it just a tactical trade, or is this a bigger move in China equities that's building?
I think it's too early to say if it's a bigger move. I do say that there are positive things happening in the Chinese market. It's got to do with consolidation and these sort of things. But as I said earlier on, I don't think that's the key driver. For me, at the moment, this is just a sort of tactical adjustment in the market on the back of some good news and large amounts of cash in mainland China. And therefore, small kind of movements in confidence and adjustments in portfolio can have a real outsized impact on market performance there. But I think we've got to be careful in China because there's still a lot of the problems that we were talking about, say, 3 months ago in China are still there. And those have not necessarily gone away. They're dealing with it policy-wise and these sort of things, but that will take a lot of time. So the Chinese market can rally very quickly, but you've got to be a little bit careful as well in how long this is sustainable and can continue.
You know, Surabhi was saying that what has changed in China, right? And Herald was talking about the valuation. We'll just put up a graphic which clearly shows the valuations. This is prices as of Friday's close. So, I mean, today's price action is not too much. But just look at this. These are US top AI companies and Chinese top AI companies. This is 2025 P multiple. Everything is 30 plus, except Alphabet on the US side. Look at the Chinese side, you've got companies at 10, 11, 13 times. Meituan is 18, Tencent is about 17. So that is, of course, I mean, that's the valuation point. And this, by the way, after the rally we've seen. Start of the year, since the start of the year, the seven magnificent seven so-called US large companies, that index is up. I mean, an index comprised of those stocks is up 5%. And the Chinese the Hang Seng Tech Index is up 24%.
So now we'll have the magnificent Chinese seven.
So it's very interesting. ChatGPT.
I'm just thinking from an India point of view, right? What you're saying is incredible data that you put up there, Prashant.
Yeah.
Really, in terms of the valuation reasons why people would be pouring into China right now.
Yeah. And they've got this impetus now because of DeepSeek. And I think it generally throws a spotlight on the fact that China, I mean, still people say it's the factory of the world. They're the lowest cost producer. That's the only advantage.
Yeah.
But something like a DeepSeek comes out and suddenly you're forced to acknowledge that maybe it's not just the cheapest
labor
lowest
arbitrage,
cost,
yeah.
labor arbitrage.
There's more to it, yeah.
Soft tech, not just hard products, right? And they're doing well there as well. ChatGPT was the seminal moment, the turning point in the US when this entire AI rally began in the US. And, we've added some $13 trillion in market capitalization in the US, most of it coming through in those seven names. That I think happened in November of 2022. Will DeepSeek be something not as big, but will it be? It's definitely turned out to be quite meaningful. But how much more is the question, really? But Herald, anything you'd be focused on here? A lot of consumer internet companies in India now in the listed space, and there'll be more coming. That's that's been the area of interest quite a bit over the last several months. Names like Zomato, etc. Anything on your radar?
Yeah, no, I mean, this is what we got to keep an open mind for, right? So China is basically sucking up the money in the region. That means that across the region you get a sell-off. And that means that there are also opportunities emerging. And maybe they're not going to turn around very quickly, but there will be stocks or sectors that they're going to look really attractive. And you say, hey, I want to pick that up at some particular point in time. It's very difficult to time the bottom of these markets. So you just pick them up as you go along. And what is really interesting in India is, of course, in the longer run, you still have a banking sector that looks considerably better now than, say, 10 years ago. You have discretionary consumer names that look pretty good. But one sector that we actually like a lot as well are some of the hospitals in India. Kind of a long-term interesting sort of story as well. Demand for healthcare picking up, people in the region. I was in Indonesia 2 weeks ago and I met somebody I spoke with somebody who was considering to go to India for some of the healthcare issues that he needed to address with, instead of staying either in Indonesia or going to Malaysia or to Singapore, which is quite expensive, he said. So there are interesting sort of stories in India that will continue to do okay, whereby the valuations also look reasonably okay. Maybe the momentum is not with them at the moment, but those are the sort of companies that you need to have on your radar screen and say, okay, I pick them up in the knowledge that maybe, hey, in the next month or so, it might still be a struggle. You can't time these things very well, but you want to have them in your portfolio.
All right. So select hospitals, some discretionary consumption names as well. And I think select NBFCs as well, given that the RBI has started its rate, interest rate cut cycle. So I think those are the three broad areas. Is that correct, Herald?
Yeah, I would say those are the broader categories that we're looking at. And if I wanted to add one to it, it would probably be some of the IT companies. I mean, in the US, under cost pressure, you see that banks in particular are more willing to outsource on the software front to Indian IT companies. It gives you a bit of an inflation hedge as well. So that's something that I would be looking for as well. But those, the key broader sectors I'll be focusing on and building a bit more exposure to.
Okay, all right, Herald. Pleasure having you on the show. Thanks a lot for joining in and filling us in with your insight. For the time being, you believe that the Indian markets, maybe we need to see the earnings come back to life. Then, India will be the game in town yet again, like we saw close to around 12 months or so ago. For the time being, we slip into a short break. Come back, we'll continue to focus on markets. We'll also get you D Street Chatter.